Guys, welcome to my YouTube channel. In this video, we'll be talking about key levels and I'll be showing you important key levels, right? Important key levels that you should never ignore on your chart at any time as a trader. If trading for long is what you want to do, make sure you do not ignore these key levels. They are very important, okay? They are very important, okay? So let's go. Let's go. All right. As you can see, this is GBP USD. This is GBP USD pair, and this is the weekly time frame. All right. GBP USD pair, and check this chart very well. You'll see that there are levels where a price got to and went upward or downward and then came back there again. So those levels are very, very key. They are very important levels. So we call them key levels, right? So as a trader, if you want to trade for long, make sure you do not ignore these levels. Make sure you take good cognizance of these levels because they are very, very important. All right. So on this channel, we talk about Forex, we talk about cryptocurrencies, we talk about trading and analysis. All right. So if you're tired of watching too many videos and want to be part of my mentorship program, kindly chat me up on WhatsApp using the link in the WhatsApp link in the description of this video, or in the first comment. There is a WhatsApp link in the first comment of this video. All right. So a a certain um a certain subscriber, and viewer from South Africa messaged me on WhatsApp sharing a screenshot of how he made $2,000 using one of my strategy in one of my videos, right? But the thing is, he was doing it all wrong, okay? He was not applying risk management and he was ignoring certain things and he was actually doing it all wrong, okay? So during this mentorship program, I'm going to take you step by step on how to do it correctly, right? So that you will not start a journey and not end it well, right? So I'm going to show you how I make my little money without risking too much on my trades. I risk a little and I make my earns, all right? So you can also do it. So just click on the link, the WhatsApp link in the description of this video. I'll also leave my contact, all right, so that you can join this um mentorship program. Okay, going forward, this let's mark out our levels, right? Key levels are very, very important. Why? Because price tends to give total respect to a particular level, all right? Depending on the time frame and the level, right? If you're using smaller time frames like maybe 5 minutes, 15 minutes, price does not really move that big in those time frames. So it's best to use the the bigger time frames like maybe the weekly, the daily, the 4 hours, and maybe the 1 hour. All right. So this is the weekly time frame. As you can see, if you see with me correctly, there is a point where price got to, right. For instance, this, 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 they are almost at the same level, right? Price got there and then rallied downward, all right? Reacted and went down, all right? And this levels too. This, 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 all right? Price got there before what? Going upward, reacted, upward, all right? So we can now say that these levels were key levels, right? Were our key levels, right? We mark that level as our key level. So let me exit this full screen. Like I always say, the reason why I always use my phone instead of my laptop for my videos is because most traders, a number of traders use their smartphone for their analysis, all right? So it's not bad to use your phone, okay? The most important thing is that you're using your landscape to see the chart very clearly, all right? Use the landscape mode to see the charts very, very well clearly so that you don't make mistakes, All right. So I'm going to mark out these levels. All right. I'm going to mark it out. Please follow me step by step. Make sure you follow me to the end of this video so that you understand what key levels are and the right key levels to trade. Okay. So look at it. Look at it. Let me use my highlighter. There is my highlighter. Okay. Where is that highlighter? I think it should be around here. All right. So this is my highlighter, and let me color it better. All right. This level, right? This level, right? This. I hope you can see it very clearly. Let me use okay. Let me delete my highlighters. All right. Please just be patient with me. Let's use this. Okay, let's exit the full. Let's go back to the full screen so that we'll see it much more clearer. Right. Look here. Sorry about the ad. All right. See, price tend to react to sorry. Oh shit. What's this? Let me go back. All right. They want me to subscribe to the premium. I don't see any reason why I should subscribe to the premium since I'm getting everything here. So sorry about that. Now you can see on this chart that price reacted and respected these levels. Let's go back to check other key levels and see if price actually respected them too. All right, let me use this let me use the rotated rectangle to show you this. All right. Okay. All right, let me just use this. Let me delete. Let me use the rectangle. All right. Look at price respected this. This was a previous word support. Price came and tapped into it and became a resistance. Just understand that previous support can turn resistance and previous resistance can turn support. Look here, this place was a support earlier. This place was a support earlier. Price respected it and went up, right? Then after price broke the support, price retested this support, right? And became what? A resistance, right? So this level became a key level, right? Became a key level because price started dancing below that level, right? So it became a key and important level. As you can see on a lower time frame, you see that these are also levels, right? They are also significant levels, right? They were significant levels. Let's go to the daily time frame to check because this is the weekly time frame. As you can see on my screen, it's the weekly time frame. Let me use the horizontal line to mark out that point so that we can, all right, we can identify it on the daily time frame. So let's go to the daily time frame. This is the daily time frame, and all right, let's exit. Let's go to the full screen. Let's go to the full screen, and we are here. Let's go back to check out what I'm seeing. You see that was the higher time frame. That was why that place wasn't looking like it. But trust me, on the daily, the 4 hours, you see that this was a key level, was a very important level on the chart. Are you seeing it? Price tend to respect that level. Price respected that level very, very well. Anytime the anytime price got there, it respected it and went down. Respected it and went down. If you go to the 4 hours, you see it like a very good move, all right? A very good move. Are you seeing it? All right. So that is it. Key levels are very, very important as the back of your hand. Make sure you know these key levels and have them at the back of your mind. Make sure when you see them, you don't ignore them. All right. If not, you end up buying at a resistance and selling at a support. And that's not good as a trader. Okay. As a trader, you should learn to buy at a good support and sell at a good resistance. Even if you're trading your cryptos, you don't ignore, you don't wait when the buys, as in the when the candlestick is already at the resistance and then you start buying, right? You don't buy high and sell low, right? You buy low and you sell high. You make sure that if you're trading Bitcoin or you're trading any cryptocurrency, make sure you wait for the right support to buy your coins and wait for the right resistance and then you sell it. Okay, it's applicable to all markets. Even if you're doing a physical business, you wouldn't want to, buy at a higher price and then sell to your customers at a lower price, right? You want to make a profit. So you have to what? You buy at a lower price and then you add something on it and sell to your customers. Is that not? That is it. You want to make a profit by buying low and selling high. Or if you're short selling, right? In Forex and crypto, if you're doing futures trading and you want to short sell, right? You sell at a higher price and then you wait for a lower, um, for a lower, for a down movement and then you take your profit, all right? Okay, so that is it. Make sure you don't ignore important levels. You don't ignore important levels. Just like this level right now, just like this point right now on the smaller time frame. Mind you, this is the daily time frame. On the smaller time frame, this was a key level, this was a key level, and this was a key level. All right. Those were key levels. So if you can see, as you can see, price got there and respected them. So if you go to the 4 hours and the 1 hour, you see that this was a nice move down there. It was a nice move down there. So let's go back to let's use this horizontal line to mark out this point so that when we get here, we'll know that this is where we are. All right, let me change the color of this so that we will know the difference between the other one and this one. All right, this is our green. Let me use a lighter green so that I'll see it faster. All right, so okay, let me use this rectangle. Let me use this rectangle to mark it out properly. Mark it out, right? Okay, I think I should use the rotated rectangle. That's much more better. That would be much more better because it almost marks out levels like the trend line, right? So now, are you seeing it? Okay, so that was a key level. So that was a key level, right? Okay, so that was a key level. So when price got there and respected it nicely, respected it nicely, respected it nicely, respected it nicely. All right. So that is it, guys. That is it. It's a crazy thing to do. Make sure you don't ignore key levels. Key levels are very, very important. I emphasize on this all the time. I tell my students, please, please don't ignore key levels. Mark out key levels before you do your analysis. Before you do whatever analysis you've got to do, mark out key levels. You see that price respects key levels. Look at price respecting key levels very, very well. Okay. As you can see, this was a level price respected so much. Price respected these key levels, right? Previously, price did something like this, and then when it got here, it couldn't go that up. It went down. it got here, it went down, right? Got here and also respected it, right? So key levels are very important, guys. Very important levels. So how do you know that a level is very key? You know that a level is very key when it has been tested more than once, right? When it has been tested more than once, right? In this case, guys, in this case, the price respected it one, respected it two, and then got here. It did a little fake breakout, and then price eventually respects it, right? And then price got there and still went down, and just like that, right? So key levels are very important, and a key level is not a level that has been tested just once, right? It's a level that has been tested more than once, right? Tested at least twice, right? So as you can see, key levels can also be broken, just like support and resistance. Okay, when a key level is broken, right, it turns to another level, right? Let's say a key support level can be broken and become a resistance, while a key resistance level can be broken and turn support. For instance, I seen what happened here. This was a key resistance level. This was previously a key resistance level. Price came down, respected it and come down. Okay, then price broke it, retested it, and then it became a support, a key support level, right? It became a support level, right? So look, price started doing higher highs and higher lows from there, right? So key support levels can also turn resistance levels, and key resistance levels can also turn support levels. If you have any question, if you have anything to say, please leave it in the comments. I'm going to attend to everybody. So I'm going to attend to you. And like I said, if you're tired of watching so many videos, okay, first of all, if you are a beginner in trading, what I would advise you to do, right? Like myself, I paid for several classes. I paid for several mentorship programs, right? I paid for some mentorship programs, and then I went on research to add to what I've learned. You can't really go fast if you start by watching too many videos. You end up being coached by so many mentors and too many strategies that you would find it difficult to find your own strategy, right? So I would advise that you go through a good mentorship program, someone that's going to be honest and integrous and teach you very well, right? So then at the end of the day, you can maybe do your own research and also do your back testing, right? You can test your hands on demo accounts and all that. During my mentorship, I'll show you step by step on how to, how to leverage this financial market with as little as you have, and then you scale. And I also teach you how you can, enroll for prop firms and, pass your prop firm account, using risk management. Okay, without risk management, you will not be able to pass your prop, and prop firm is the best way for you to, start as an skill in your trading journey, because with prop firm is going to give you more funds. Trading is all about the volume, so you'll be able to have access to bigger funds, okay, with proprietary firms, right? So that's that. I don't want this video to be too lengthy. I don't want this video to be too lengthy. Okay. So I want this video to be as brief as possible. So that will be the end of this video. I hope you grabbed something. I hope you learned something new, or at least you heard something about what you already know. All right. So please give this video a thumbs up if this is what you loved, and you may consider subscribing to this channel and be part of this family. All right. I would love to see you in the next video. Please use the WhatsApp link in the description of this video, or the first comments of this video, to message me for mentorship. All right, guys. See you in the next video. Bye.